Welcome back. We are now hearing MasterCard and Chainlink are enabling on-chain crypto purchases using MasterCard's 3.5 billion cards. Guys, things are going on in crypto, and there are still people out here saying we're not in a bull market. The bull market hasn't even started. We're not at all-time record highs, even though we literally are. And in today's video, we're going to be exploring what is going on in the market. Pompliano is buying the top. Chairman Powell of the Federal Reserve has green-lighted banks for crypto. The USDC and stablecoin mania continues. We're going to be talking about this partnership between MasterCard and Chainlink, what this actually means for the rest of crypto, because this is actually big. Remember, Chainlink is the connector for off-chain to on-chain, with many different chains involved here. So we're going to be talking about that. We're also going to be talking about Visa and Solana. So we have a ton of info to get into in today's video, and really understanding that, in my view, we are already in the banana zone, right? As Raoul Pal always says. The thing is, Wall Street is in control, and everything that we're going to be talking about in today's video is showing you that Wall Street is already here. The exit liquidity is already in the system and starting to trickle down a little bit, meaning like Wall Street has already been buying. People say Cryptoviser, they're about to start buying. Wall Street's buying. This company's buying. It's like, no. They already bought. As you guys can see, just in the Bitcoin ETF trackers, they have $131 billion in assets under management. And the ETFs were approved about a year and a half ago. And so in the last year and a half, all this money has been entering the crypto ecosystem, entering the crypto space. The Bitcoin price has continued to go up, and people are saying, well, Cryptoviser, we're not in a bull market yet. The bull market hasn't even started. Even though you can clearly see on the chart, we went from $15,000 at the low all the way up to $112,000 for an 8x. But the market cycle is not over just yet, but we are getting close to the end, in my view. And all of the things that we're going to be talking about is really about Wall Street starting to implement these things, and they are preparing for the next cycle. Don't forget to give this video a free thumbs up. We upload every single day right here on the channel to bring you the latest happening in the financial world. Even if you don't agree with what my outlook or thesis is, it is really important to understand kind of differing views, and that's what we talk about on this channel. We listen to experts that are saying Bitcoin's going to 500,000. We listen to experts that say it's going to 10,000. We listen to people who say it's going to 0. And then we break it down and analyze which is the most likely outcome for the market and for crypto. And so we're going to be starting right here because, again, the bull market has already started. If you're just figuring these things out now, you are way behind, and you are going to be the exit liquidity for the market. Federal Reserve Chairman Powell said that the banks are now free to provide crypto services to Bitcoin and the crypto industry. Let's listen to what he said. He was being questioned in front of Congress the other day about general kind of macro view about what's going on. And this got brought up quite a few times, the whole crypto and what the banks are supposed to do. And remember, historically, all of the regulators, aka the Federal Reserve, there's the main regulator, even though they're not a regulator, but they're the owner of the banks effectively, right? They were pushing to keep crypto out of the banking system and keep crypto out of becoming, licensed banks. So now let's listen to what he says here. After just a few months after the Operation Choke Point 2.0 was put to an end by the executive orders of the president. Let's listen in.
Crypto space.
So our view is that banks get to decide who their customers are. That's not our decision. And so banks are free to provide banking services to the crypto industry, to crypto companies. And banks are also free to conduct crypto activities as long as they do so in a way that is, protective of safety and soundness.
Crypto space.
So,
I mean,
our view.
Just look at even the cameraman is like, yeah, he should have said this a few years ago. But anyway, so yeah, you guys can see. The other thing that we've been talking about is all these Bitcoin treasury companies. And one of the things that I talked about is Anthony Pompliano is now starting, one of these Bitcoin treasury companies called ProCap. Didn't mean crap, but anyway, ProCap, and it is a publicly traded company. And basically, he raised, I think, a little bit more money than this to actually buy Bitcoin. But my whole conversation over the last few weeks is he's a smart guy and he understands how the cycles work. Even though there were there was a lot of surprise in the last cycle that BlockFi and Celsius and Voyager and Three Arrows Capital and FTX went down, even though on this channel we knew that there were serious issues with all of that back and forth. And so I was kind of theorizing that it would make a lot of sense if Pompliano raised the money and waited for pullbacks in the market before he started buying. But that's not what he did. Pompliano's crypto venture buys $386 million in Bitcoin. And this is after announcing a $1 billion plan to go public later this year. So they're buying the Bitcoin with the anticipation of going public at the end of the year. But the thing is, guys, like we're at all-time record highs. And if you really just look at the charts, we're not chartists on this channel, but double top at the beginning of the year, double top now, that's a quadruple top. And it doesn't seem like there's a lot of support above the $110,000, $115,000 level. Now we may go above that, but the thing is, the catalysts have to be ever increasing because MicroStrategy has to keep buying large quantities, billions and billions of dollars every single month. Otherwise, their whole thesis and strategy deteriorates. And my thesis, and based on the data and based on experts who've been in the field for years, everybody's saying that we're at the top of the market. We may not be at the pico top, but we're definitely towards the top. So whether we go from 110,000 to 150,000, or even 200,000 or 250,000, we are going to have a pullback at some point, and potentially for an extended period, aka the bear market. And these Bitcoin treasury companies and people like Pompliano, who's a very smart guy, are buying the top of the market for these new type of companies that have not really been tested besides MicroStrategy. But that's a whole different ball game. And so my thesis is that because they're all buying at the top, it's not just Pompliano's company, it's also 21, it's also some of these other ones, that in a bear market, because their dollar cost average is so high, they're going to be showing extreme losses on the books. How is that going to play out? And by the way, there's everybody that I've seen who's analyzing these Bitcoin treasury companies continue to say that they are basically like, oh no, there's no way that these companies are ever going to sell any of their Bitcoin. There's no way that any of them are going to get liquidated or go bankrupt. And I'm like, well, we're at all-time highs. And there's people who don't think that we're at all-time highs, even though literally that's where we are. And these companies are buying at the top of the market. This is what is keeping the market elevated. But everything that I see going on is the euphoric and the complacency part of where we are in the psychological charts. And I mean, listen, guys, it's not just Pompliano, like I said. You can see the Bitcoin ETFs, they're purchasing billions and billions and billions and billions of dollars. But the thing is, the ETFs, they're not locked in like MicroStrategy. They do sell, and they will sell when there is a kind of a move to the downside in the overall markets. And to think that that's never going to occur is, I don't know, I think it's ridiculous. But yeah, you can see throughout June, it was basically all inflows into the Bitcoin ETFs. We've also seen the Ethereum ETFs continuing to have massive inflows. But there's people who are saying, oh, no, there's no bull market. We're not in a bull market. Retail hasn't even entered the game. And I'm like, they're buying billions of dollars. And by the way, the ETFs are a derivative of retail because people are buying the ETFs instead of buying the Bitcoin because the ETFs are in safer accounts than putting it on exchanges. And so that's where, like, the retail is already here. Like, you're already here. I'm already here. Like, retail is already here. And to think that retail is going to outpace what Wall Street is doing is absurd. And so this is the exit liquidity. A lot of people still don't think that, but it is. Anyway, I thought this was pretty funny. It says, when people refuse to buy Bitcoin, and then a clip of Trump. So when people refuse to buy Bitcoin,
They don't know what the fuck they're doing. Do you understand that?
sounds a little funny ex post. But anyway, we've also been talking about stable coins quite extensively. And right now, the mania is not an alt. Like everybody's saying, oh, but Cryptoviser, we haven't had alt season yet. And I'm like, well, what makes you think that we have to have alt season just because it happened in previous cycles? Well, that was a previous cycle. That's not today. And Wall Street, the big money is not really focused on altcoins. Some of them, they are, like Ethereum, Solana, maybe XRP. But for the most part, the focus is on stable coins. And so what are we seeing? We're seeing the Circle IPO go from $30 to $300. It peaked out at $300 over here. You can see just a few days ago, we hit $300 and came right back down to $200, already a 30% drop and potentially going much further down. But the other thing that I remind you is the reason stable coins are in this mania right now is because they are going public. There is money to be made in stable coins and they're connected to every ecosystem. So the ecosystem, well, not every ecosystem, the smart ecosystems. So these ecosystems that have USDC on it, they are going to, over the coming years, not overnight, but over the coming years, they're going to see massive inflows and more usage because these chains are connected to the regulated product that's now becoming or is the digital dollar. And it's unbelievable to me that over the last 3 or 4 years since the last bull market, that there's been ecosystems that haven't done what they needed to do to get USDC on their chain. And it's many different chains. I mean, a lot of chains in the top 50 don't have USDC integrations. And this is a problem. And as you guys saw, like people were saying, Cryptoviser, you're wrong about this. You're wrong about this. Well, what did XRP do? Once Circle went public, boom, native integration. And so they clearly were doing what they needed to do on the back end to get USDC integrated. Meanwhile, other ecosystems have been pushing it off for years, telling people stories that didn't actually occur, or not giving the full picture of the story of why USDC is not on those chains. And it is going to be a problem moving forward, whether USDC or Tether, one of the two, need to be integrated on your chain, period. This goes for Internet Computer as well. A lot of people in the Internet Computer ecosystem continue to push this narrative that chain fusion or interoperable USDC or Tether is the same thing as natively issued USDC or Tether. It's not. And the fact that the developers within Dominic, the founder of Internet Computer, has said that they want native USDC integration. I just don't think that it's been a priority for them because they're trying to build out the infrastructure for on-chain compute and on-chain storage and on-chain deployment of dApps and all of this kind of stuff. So I think their focus is more on the development of the technology versus the integration of the stablecoin. But I do think that it's important. And I think what potentially is going on here is that Dfinity is looking and saying, well, we need to prove that we have the tech before we get it, before we try to go and get USDC integrated, which kind of makes sense. And it goes in line with what we recently just heard and found out from the Cardano ecosystem. Charles stating that Circle will not implement USDC on Cardano because there's not enough DeFi or usage, right? They're not just going to implement it on a chain and then nobody uses it because there's a lot of money involved to get it integrated and keep it up and running and safe. And so that does kind of make sense for Internet Computer, but at the end of the day, they still need USDC or Tether, and they can do two things at once. They can build out the compute while also trying to get the integration of Tether or USDC. I would imagine for Internet Computer, it's probably going to be a little bit easier to get Tether than USDC on chain right now. But either way, you guys kind of get the point. The point is, the chain's not connected here. Or let me rephrase this. The chains that are connected here are going to do extremely well over the coming years, right? From a technological standpoint, adoption standpoint, integration standpoint, price perspective, I don't know. We'll have to kind of keep an eye on that. But the other thing to keep in mind is that Coinbase has a very deep connection to Circle and USDC usage. And so the fact that what we saw was Circle price going up after the IPO and we didn't see a Coinbase move doesn't really make any sense. But we recently just saw a little bit of a move as Circle started to come down from that $300 all-time high, 10x the IPO. Coinbase started to gain some traction. And you can see here on the 5-day chart, Coinbase went from about $250 all the way up to, I don't even see the price. There we go, $359. So it basically went up $100 in basically a week. So as Circle was, or people were selling out of the Circle, they were moving and putting it into Coinbase, because at the end of the day, Coinbase, from my understanding, they get, I think, 50% or something like that of all of the USDC interest from USDC that's issued from Coinbase or something like that. But yeah, I mean, even this article, it says Coinbase is the most misunderstood business in crypto. Bernstein, one of the analysts, hikes their price target to $510. And when I'm recording this, it's about $350. And remember, 1 week ago it was at $250. So in 1 week, Coinbase went up $100 and Circle came down $100. So is there an inverse correlation here? I don't know. I mean, let's look. You can combine these two, and yeah, you can see that they well, this is the 5-day chart. There's not really much to go on with Circle because it's a new stock, and there's not a lot of float of the shares. So keep that in mind here. And by the way, if you're up to this point in the video, don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. So yeah, Circle, we don't have really much, but you can see here now that they've crossed, right, in terms of gains versus losses. So it's going to be interesting to see how Coinbase performs, as Circle is in price discovery mode. But again, we need to understand what Coinbase's business model is and the fact that we are towards the end of the cycle. But keep in mind, the results that Coinbase has is always a few months a lag, right? So we're going to get Coinbase results in, July or August, probably August, for April, May, and June. And so it's going to be lagging data. And so if the market is topping out now, that would indicate highest volatility in the market, highest volume, most trading going on, aka more money for Coinbase. Anyway, Coinbase remains one of the most misunderstood companies in the digital asset space. According to Wall Street broker Bernstein, in a research report, they raised their Coinbase target to from $310 to $510 and reiterated outperform rating on the stock. They said, while broader sentiment leans bearish, interesting. Coinbase is cementing its role in the crypto as a universal bank and is bridging retail, institutional, and on-chain infrastructure at a scale unmatched by peers. They said Coinbase will be a beneficiary of the Genius Act and will soon to follow Clarity Act. These are the stablecoin bill and crypto clarity in the financial space. And again, we just heard from Powell that banks are free to provide crypto services, and we know that they are preparing to do that. And so maybe that's the mania that ends the cycle, right? That brings us into the bear market. It's potential. I don't even know okay, here we are. Bernstein said that Coinbase is the only crypto native firm in the S&P 500 and continues to dominate U.S. trading despite competitive pressure. Coinbase's stablecoin business, responsible for 15% of their total revenue, is scaling rapidly with integrations like Shopify. And again, now Circle is a publicly traded company, so other companies view that as a green light to integrate or use their technologies. On the institutional side, Coinbase powers custody for 8 of the 11 Bitcoin ETF issuers. And with the recent acquisition of Deribit, the largest crypto options exchange globally, and the explosive growth of Ethereum Layer 2 network Base, Coinbase is quietly assembling the core infrastructure of the next financial system. Now, something to keep in mind here is I've been reading a lot about this Deribit and derivative trading on Coinbase. And it seems like Coinbase is setting up for U.S. Release or deployment of perpetual futures contracts. Now, some people view that as good, and you're going to see the narrative is going to be like, oh, wow, Coinbase is now allowing, getting approved for U.S. futures trading or perpetual derivatives or whatever the situation is. But the thing is, if you look at Bitcoin in 2017 at the top of the market, you look at 2021 at the top of the market, the exact day of the top of the market was the exact day that Bitcoin futures launched, both in 2017 and 2021. And so when I see Coinbase preparing for this and the market is going to be bullish on this, I already believe that we're towards or at the top of the market. This could be this could be one of the catalysts that puts us into a bear market. The other thing to keep in mind is all of the altcoin ETFs that are anticipated to be approved. So you got perpetual futures and other futures trading that's going to deploy in the US. You have other crypto ETFs that are going to deploy in the US. This is the final exit liquidity for the cycle. Because after that, the smart money is going to move into assets that have been underperforming, potentially the altcoins, potentially the Bitcoin mining companies, potentially other sectors of the economy. And to think that it's not going to happen at all-time record highs, I think is not investing. It's just hoping and praying, right? But there is a lot of positive things that are happening, and this is what is driving people to not sell their coins and saying, "Oh, they're just starting to get involved. MasterCard and Chainlink just enabled on-chain crypto purchases." It's like, yeah, but nobody's using it yet, right? And for full integration and implementation of these capabilities and technology, it's going to take years. This is just the announcement. But an announcement shouldn't drive the price action. The actual technological capabilities should. But let's understand what's going on here. So MasterCard and Chainlink are teaming up to power Swapper Finance, a new way to buy crypto directly from DEXs using any MasterCard. Holders of MasterCard's 3.5 billion cards around the world will now be able to directly purchase crypto on Uniswap through instant and secure crypto to fiat conversion. Swapper is powered by XSwap, the leading DEX built out of Chainlink ecosystem. Swapper uses Chainlink standard for data and interoperability via an integration with Zero Hash and Shift for payments, and it's backed by MasterCard's global payment rails. These partnerships with leading infrastructure providers allow secure tokens to be purchased on DEXs using the next generation app. So basically, they're announcing an app to buy crypto on Uniswap. And everybody's making this seem like the biggest thing in crypto just happened. Now, I'm not taking away, this is big, right? The fact that MasterCard is even getting involved in DeFi at this level, this is pretty cool. And it is a very positive sentiment for the rest of crypto, right? But how many people are actually running to go use their MasterCard to go buy crypto on Uniswap, right? This is just an integration of the technology and just a further understanding of how crypto, like people think it's going to be a light switch. Like one day you just like wake up and everybody's using crypto and stable coins and Coinbase and DEXs using MasterCard. That's not how these things work. It's slow integrations over the course of time. And this is where a lot of people get messed up because they're not buying into crypto. They don't believe in it. And then we're at $110,000 and they're like, wait, shit, I missed it at 10,000. And everybody now is saying we're going to $1 million Bitcoin, so I need to buy now. And then they buy it $100,000 or 115,000 or whatever the price is. And then they have to be bullish, even though people like you and I are not that bullish because we are at all-time record highs. We are seeing top indicators. And if the market does fall, all those people who invested at all-time record highs, they get wrecked. And by the way, this continues to happen, right? In every single cycle. So these things are transitionary. They're not like overnight you wake up and boom, everybody's using Bitcoin. No, but in 10 years when people are using USDC as a major transactor of payments and you were not involved in any of the understanding of this, you're going to be way left behind, right? This is where people like, the older generation, they're like, well, technology is moving too fast. It's like, no, you're just not adapting as fast enough, right? Maybe technology is moving fast, but what do you want it to just stop, right? That makes no sense. And so these things are really important for you guys to understand because, yes, an integration with MasterCard and Chainlink, this is amazing, right? Chainlink has $22 trillion of transaction value enabled. This is the cumulative monetary value of transactions facilitated by Chainlink oracles. $22 trillion. Total value secured, locked in the system, TVL, is $43 billion. So this is very big, and this is an amazing integration. But this is not an indicator that, oh, Wall Street has entered the game. It's like, no, they entered the game 2 years ago with the Bitcoin ETFs. This is just integrating. And so this is where people are going to get messed up because they're not realizing that it's a transitionary thing. I'm not saying that we're bearish forever, that Bitcoin's going to go down and never hit over $110,000 again. I'm just saying right now, right, based on the Bitcoin halving cycle theory, like people are even saying Cryptoviser, the 4-year cycle's done. We're never going to see the 4-year cycle again. I'm like, no, we are right in line with the 4-year cycle. It may not be the 4-year cycle you want, right? Because altcoins are not on the 4-year cycle. They have been historically, but that's only been 2 cycles. And so I am bullish in the long term, but these are the signals you got to look for. Like everybody's pumping this up. Wow, MasterCard and Chainlink are putting on chain. It's like, yeah, but it's for a DEX. How many people are actually going to do that? And by the way, then you see posts like this. This person said XRP grifter takes the announcement between Chainlink and MasterCard and just adds some random PowerPoint from God knows where from the year of our Lord and associates it to Ripple. The XRP thesis is simply predicated on how long you can keep Rube satiated with this slop. Basically saying that, yeah, look, somebody wrote Ripple shaking hands with MasterCard, shaking hands with Chainlink, because on this slide, which nobody knows where it's from, it says MasterCard partners, Ripple and Consensus, Fluency, and Fireblocks. And so now MasterCard, this announcement about MasterCard has to do with XRP, even though it literally has nothing to do with XRP. The same user said, not even the only one. It's a blueprint of grift. This user said, Crypto Barbie said, MasterCard has partnered with Chainlink to enable billions of cardholders to purchase crypto directly on chain. In the past, Ripple already partnered with Chainlink. So what does one have to do with the other? It doesn't. And a lot of ecosystems do this. And this is also peak top indicator. It literally is. Because this does not happen in the bear market. In the bear market, bullish news is literally bullish news. In the bull market, everything is bullish news. And so everything is grasping at straws, right? Guys, the idea that Wall Street, like people are saying, but Cryptoviser, this altcoin didn't do well. This altcoin didn't do well. It's like, but what has the altcoin done? Like what? Like you can take Ethereum, and yes, Ethereum has a lot built on it. It's the number 1 chain being used, the most TVL, the most interoperability, the most layer 2, the most usage out of any other blockchain, but it hasn't reached all-time record highs. But it doesn't mean that it's going to, right? We haven't had a lot of exit liquidity, right? People have a lot of bags in Ethereum and a lot of these other coins as well. But it doesn't have the institutional interest that Bitcoin does. And so Ethereum doesn't have that interest as basically the number 1 ecosystem outside of Bitcoin. Why do you think your coin, like XRP or Solana or Cardano or Tron, why are these coins going to do better and going to get Wall Street adoption before Ethereum? It's not going to happen, right? And so, we can see the data that really just the focus has been on Bitcoin. And so now that we're towards the end of the cycle, guys, the indicators are there. The XRP army, the price is stable here, and it may stay stable around this area because remember, the last cycle when XRP was dealing with the lawsuit, they didn't really move higher because of the lawsuit, right? So they're a cycle behind in terms of price action. But people now are connecting announcements of other ecosystems to XRP and saying XRP is going to be there. No, what XRP and Ripple are doing right now are setting up to become bigger, but it's going to be for the next cycle, guys, right? If the ETFs launch for XRP, everyone's going to be so excited. The XRP army is going to jump up and down. But at the end of the day, who is Wall Street buying the XRP from? Not from you and not from the market, from Ripple. And so there's a lot of overvaluation outside of Bitcoin. And there's a lot of hype. I mean, even hype is entering the top 10. And what is this coin? A DEX? A DEX coin? It doesn't make any sense. It doesn't make any sense at all. But meanwhile, Chainlink posted this video from MasterCard's executive vice president, Raj. And by the way, a lot of these companies have been testing and utilizing blockchain technology for years. I mean, Fidelity has been mining Bitcoin since 2014. MasterCard has been involved in blockchain testing for years. So is JP Morgan. So this is not like a crazy, amazing announcement. This is just MasterCard is now implementing the technologies. They've tested and researched for years. Now they're implementing. This is just, guys, I mean, going back to the USDC thing for a minute. Again, anticipating where this whole cycle is going, anticipating what Wall Street is going to do, right? The fact that Anthony Pompliano is buying Bitcoin at all-time record highs and towards the end of the cycle from a historical perspective, days since the halving. I mean, if he waited, I was going to say this is going to work out, but I don't think it can. Right? Just like a few years ago, I said on this channel, USDC will be the digital dollar. It is the digital dollar. I may even have a video still up about that. People are like, no, Cryptoviser, it's going to be Tether. I'm like, no, they're setting USDC up for it. And then USDC Circle got a connection into the Federal Reserve. And I was like, oh yeah, this is the digital dollar. Right now, we're going to probably see Tether integrated as well. But you guys have to be able to anticipate like what the market is going to do and where the technology is going. Like, this is not a surprise because we've been following MasterCard and Visa in their whole blockchain journey for years. But there's people who just got started buying at 100,000 and they're just finding out that MasterCard is involved in crypto. And they're like, wow, this is the most bullish thing. It's like, yeah, but they've been doing this for years. It's not news, really. Let's listen in. Executive VP at MasterCard.
As you said, if the crypto folks are buying and selling to other crypto folks, then yes, that is in a vibrant ecosystem and it's continuing to grow. How do we get more parties involved? How do we make it easier for people to interact and buy assets, sell assets on the chain, right? That's when we grow the pie, if you will. And this really bridges that gap. While this is initially opening up few assets for people to buy, that framework that I think we worked together, and I found Chainlink to be an incredibly quick partner on this in terms of coming up with solutions. This is extensible to other things, like you have this journey of real world assets getting tokenized and coming onto chain, and every one of those assets require a payment leg, and more payment legs are available in order to buy and sell those assets. More people will come on chain and interact with the chain for a variety of use cases, and the velocity and number of apps that can get on the platform will exponentially increase.
And so you could hear what he's saying is that this is a longer term plan, right? It's a transitionary plan to move away from these old payment rails, including potentially I mean, think about credit cards. The idea of credit cards is a very old school type of thing. I mean, you don't even need your actual physical credit card anymore. You could just have Apple Pay or whatever, where you just scan and tap. And so I think there's even credit cards now that they send you the card and it doesn't even have any information on it. It's just the chip. And so, what is the future? The future is digital payments and utilizing, newer technologies, newer capabilities that's where blockchain comes in very well, right? It's just a ledger, a decentralized ledger. And so, that's from MasterCard. And Visa is also embracing stablecoins, right? Back to the stablecoin mania. This is from the Solana social media team. They said the Visa CEO says, we've been embracing stablecoins. Over $10 billion in stablecoins are issued on Solana with $140 billion in monthly volume. Let's listen to what the Visa executive said here.
We've been embracing and building for years, preparing for this moment. The Genius Act has now passed the Senate, as you know.
That's the stablecoin bill.
And is expected to pass the House. I think that'll give regulatory clarity to stablecoins. And we've been embracing stablecoins. We've been enabling people to issue Visa credentials on top of stablecoins. We've been modernizing our own settlement infrastructure with stablecoins. And we have a whole host of innovations that we plan to deploy around the world embracing stablecoins.
And so what you're hearing here, right, is these major companies are jumping on board, right? to me, this says that they wanted this for years, right? And we could kind of figure this out. There's no way that these companies want to be doing this at the end of a bull cycle. It's my personal feeling, or they're doing it on purpose, like Circle IPO, because the final stages of the bull market, right, whether it's a crypto bull market or another bull market, is the final flow of capital into a newer asset, right, a repositioning of a portfolio. That's really why you see the major price hikes, because there's excessive buying from institutions or retail or short squeezes and stuff like that. But guys, Circle IPO, GEMINI is saying they're going to IPO. We've had a lot of other crypto companies that are kind of getting into the crypto space with these Bitcoin treasury companies, SPACs, and Bitcoin ETFs. And so the money has already been flowing for years at this point in. And, you know, as we saw with the Bitcoin ETFs in the beginning, right, they made initial purchases and then they stopped making purchases, right? Because the money is, people, I don't know, people in crypto just think the money just flows forever. It's like, no. People take profits and they slow down their purchases, especially corporations. Corporations, they want to buy and then they want to hold and see how that investment does. They're not just going to keep buying and buying and buying just because Michael Saylor says we're not going to have a bear market. That's not how things work. And so you guys have to keep that in mind. Let's continue listening in. And by the way, the stablecoin integration, this is getting involved in crypto without having to touch the volatility. That's the bottom line. That's why you're seeing all these, the mania around stablecoins, is because look at how much access you get into the crypto ecosystem just by connecting USDC. But corporations don't want to connect to these chains directly. And they don't, I don't know, they don't want to, I guess, use Coinbase to just like get into these ecosystems. Like it gets really weird when you're at a corporate level, right? They want to move their money into and just buy or move their money in to utilize wrapped coins or interoperable DeFi coins. And by the way, your USDC is still in a protected manner. This is the big difference between where we were with stable coins and where we are. Now they're being integrated into the financial system. Central bank is giving the banks approval to do this. It is there is a lot of reputational risk from these banks and other companies if they get involved in these cryptos and there's a major issue, whether it's a hack or a theft or anything like that. And so I think their first foray is into stable coins because it's the safest thing. But if they're buying into stable coins and they're integrating stable coin capabilities and technology, you better be damn sure they're getting involved in other cryptos, right? I mean, it should be very clear. Let's continue listening into the Visa CEO.
Do you believe then stablecoins are going to be a significant way that people transact in the future?
What do you think the answer to that question is?
Hey, David, we think there's product market fit for stablecoins in 3 areas. The first is the capital markets use case, and you've seen that with crypto trading, and that's true globally, here in the US and around the world. But the product market fit that's most interesting going forward is outside the US. And there's 2 areas. The first is countries where you've got high currency volatility or currency controls, where people really want to have access to US dollars, and they either can't get US dollars or it's very expensive to do that. Stable coins provide an opportunity for people in those countries, maybe there's 30, 40, 50 of those countries around the world, to have easy, cost-efficient access to US dollars.
And this is really important to understand because if you go to different countries, there are countries that deal with their local currency and also dollars. But so if you're going to pay in dollars, typically you're paying a higher rate than you're actually paying in the native currency because of the conversion rate and because of the volatility of those currencies. And so going and getting physical dollars from these, money exchanges or whatever, it can be expensive. And we've talked about that on this channel many times before. This is really about banking the unbanked effectively. And so now, because most of the world has access to a cell phone, and they can access these blockchains and these alternative kind of payment systems and rails. I mean, Cash App has been doing this for years in other areas of the world. And they want to integrate into messaging systems as well. X, formerly Twitter, wants to do this as well. Because it's just about giving more people access to the financial system who didn't have it. And so they're not implementing stable coins so that you can get rich, right? They're implementing stable coins so they can get rich on the transfers and more money entering the system and more transactions being used. And you as the customer may not see it, but think about it. Like if you're paying by USDC or by credit card or debit card, there's has to be some incentive for the network to actually process that transaction, right? Maybe it's just that they're getting a much cheaper rate versus their own payment rails. I mean, think about it. Visa, MasterCard, these are payment rails, and they're implementing crypto. Why? Because it's cheaper than their own rails. It's faster, it's more efficient, and probably more secure than their own rails. Let's continue listening in.
And we'll plan to give them Visa credentials on top of those stable coins that they can spend in merchants around their country or other places. The second area of product market fit is cross-border, and that can be remittances, person-to-person, or business-to-business transactions. And in both of those areas, those are additive opportunities for Visa, and we're embracing stable coins and building and innovating on top of them to provide new use cases in those areas.
Now I'm going to pause here for 1 second because this is where XRP can come in, or not really even XRP, Ripple. Because Ripple over the last 10 years or so, they have been pushing forward with these payment rails and securing payment rails and integrations with banks outside the US for a decade now. And so they're ahead, I would imagine, than where Visa is. And so could potentially be an integration there. But now Ripple, right? People are just focused on Ripple and XRP, but Ripple has major competition now because Ripple's whole thing is about cross-border payments, making, people sending money home in other countries or transacting cheaper. But if now you have these major players getting involved, this is major competition for Ripple, but it's also major competition for Visa, MasterCard, American Express, all these payment rails. Big competition for them is that USDC is getting in the race and also XRP. Let's continue listening.
Right.
I think there's a little confusion because most stable coins are US dollar denominated, people immediately think about use cases in the United States.
Yep.
When I think most people who studied this and are active in this really understand that the product market fit is outside the US.
Yep, exactly. And so what we're seeing in the US is not integration of this technology. This is a big difference, right? We're seeing the US buying this technology, governing the technology. Because remember, when you buy the coins, you have governance power over the network. And they're not only buying the Bitcoin directly like this, Anthony Pompliano and the other Bitcoin treasury companies, they're doing it through the ETFs. They're doing it through the Bitcoin mining companies. We've talked about this before as well. I mean, a lot of the Bitcoin mining companies have restructured over the last 4 years. And a lot of them have, go look at their board of directors. The people from the defense industry, people from the intel industry, because this is a national security concern if Bitcoin becomes or is backing the world reserve currency, which currently is the dollar. And we've heard Trump talking about how this is going to make the dollar stronger. Bessent, the Treasury Secretary, saying the same thing. And so you have to sometimes remove yourself from the bubble of the US. The US is investing, but around the world, they're implementing these technologies. And yes, it's going to bring money to these companies. It's going to bring money to the networks, but it's not going to do it if they don't get massive usage and massive integrations. And so the US is really funding all of this and kind of pushing the money into it to get this going. But the rest of the world, remember the US, if you're making $50,000 in the US, you're still making more than 80% of the rest of the world. You go to other areas of the world with 50 grand, you're going to live like a king or a queen, for real. And so what we are investing in the US, you have to understand this is significantly more money in other areas of the world. And this is really going to change these people's lives, giving them more access to the system. Obviously, there will be problems that come in as we see with our own banking system here in the US, highly centralized, highly controlled. There's no incentive for you as a user to utilize one bank over another. I mean, they're both giving you basically nothing on your money. And so those things are going to have to be figured out as time goes on. But for now, the building is going on. And the building is happening for the rest of the world. The US is going to be a part of that. But really, this is solving major problems for other areas of the world. And Visa, MasterCard, I mean, I would imagine they're looking at these areas as they're not making any money in these areas. And if they can implement new technologies that the people there can use, even if it's just a small fraction of a penny per transaction that they're making, well, that's a fraction of a penny more than they were making prior. And the people who live in those areas now have access to the global financial system. So even though you may not like these large corporations, are they going to give people opportunities that didn't or wouldn't have those otherwise? And I think that that's big. Because the thing is, if you don't have access to the global financial system, you can't be part of the global financial system. And so you can't get the benefits of the global financial system. Granted, there are also, downsides, because as somebody is getting rich, somebody is getting poor. And you have to keep that in mind. That's why it's really important to, when you are taking profits, give back, and make sure that you're investing in technologies that are going to help people, whether it's here at home or overseas or just globally, everybody. Anyway, hopefully you guys enjoyed today's conversation and video. Let me know what you guys think down below. I mean, for me, I think that we're already in the banana zone. It just may not be the banana zone that you wanted. See you guys in the next video. Crypto on.